you so much. And again, good evening, everyone, and welcome to another exciting weekly Wednesday webinar at the United States Senate Federal Credit Union. My name is Milton, and I'm the Membership Development Officer here for the Credit Union, and we're so thrilled to welcome you back to what I like to say. This is definitely one of those webinars that I have always been curious about because if you're like me, I'm not sure, and feel free to share your experiences, how it's been for you, and lately, if you ever purchased a car, what kind of surprises you come across when you were signing all those lovely documents. Once you're done, once you're done with a test drive and you fall in love with the car, and then you see one price, but then all of a sudden that is not the price that you were supposed that you were going to get. So if that is you, if you're one of those people like me that always had additional questions, then I tell you what, you are in for a treat. And we truly, like my colleague Kim stated at the beginning, we have the true definition of an expert that is going to be leading this presentation. Again, I would like to remind everyone, we'd love to have our attendees engaged during the presentation. So if at any time you have any questions, any comments, please feel free to use the chat feature and submit your questions either using the Q&A or put them in the chat if you like. We have our amazing team is going to be reading those questions at the end, and it is always a commitment that we will answer every question before we let you go tonight. With that being said, I'm gonna go ahead and start with the introduction of everyone that is in attendance today. I would like to say that that a familiar face is not on tonight, and that's because it is taking a little break from us for the next two Wednesday. He's actually traveling international, and that is Mr. Eddie Villanueva, the official MC. We're missing him tonight, but he definitely needed a break. So I'm so happy that he gets to enjoy the night off today. And with that being said, from the marketing team, we have our amazing Eli, who is going to be keeping track of all of your questions, all of your comments. Along with Eli, we have Andrea Londono as well from the marketing department, and you already heard her voice. I'm sorry, Ms. Kim Freely from the membership development team, and the person in charge of putting all this beautiful content, Ms. Carrie Lazar. As always, thank you, Carrie. And with that being said, the man of the hour, none other than Mr. Ken Bell, who, let me tell you a little bit of his background, just so you have an idea who is going to be presenting today. Ken has been with the credit union for 10 years. He's actually been in the retail environment for, get this, over 52 years. He don't look like it, but he's been doing this for 52 years. And most important, he was actually a finance manager for two different dealerships for over 10 years. So it just goes to show you that you are in good hands tonight. And I'm going to stop right here, Ken, and I'm going to hand it right over to you. So please welcome Mr. Kenneth Bell.
Okay, thank you, Milton. So, Carrie, if you will, just flip over to the first video that we have. So the agenda that we want to cover today is common financing traps that we've probably all experienced at some point. Contract breakdowns, smart buying tips, solutions that we offer, and then we'll have a Q&A session. Next slide, Karen. So common dealer financing traps, spotting tactics that could cost us money, obviously. One of them is determining the buy rate and the sell rate. So dealerships have multiple relationships with different banks and credit unions. So typically they will, when they're trying to establish a rate based on different criteria like your credit score, income, DTI, debt to income ratio, loan to value on the vehicle. They send that out to multiple lenders, and sometimes they'll do what they call a shotgun blast, and they will send it out multiply to 5 or 6 different banks at the same time. So one of my suggestions is never let and make it known in the beginning when you establish a relationship with the salesperson that you don't want your credit pulled until you have selected a vehicle and you're ready to make a buying decision. Uh, so they should know that already because obviously that's part of the uh, Credit Lending Act. They know they're not supposed to pull your credit. So you want to just make sure that they know where you stand on that. Next slide, Carrie. Interest rates. Dealers increase the lender's approved rate uh, because they get a buy rate from the lender, and then of course, they want to make a profit, so they increase that rate to the consumer. So that's why you want to get pre-approved for the loan prior to even going to the dealership or considering purchasing a vehicle. It gives you more negotiating power because you know exactly what you're pre-approved for and also where you stand on the interest rate. Yes, some dealerships have manufacturer incentives that we don't offer. Typically, they're lower interest rate, but they're shorter terms. So you may get a 1.9 or a 0% rate offer, but it's going to be for 36 months on a $70,000 vehicle. So if you can handle that payment, that's what you got to look at. Obviously, most people can't uh, handle the payments of some of those rates that they offer, and some can. So if it's advantageous for you to take advantage of what the dealership offers uh, in the long term, certainly I recommend doing it. If you can do a shorter uh, or a shorter, smaller rate and still have a decent term, keep in mind we can refinance that loan. A lot of dealerships offer you rates that are good for, you have to keep them for 3 to 6 months. And then at that point, you can come back to us at the United States Senate Federal Credit Union. We can refinance that loan for you in a different situation. So just keep that in mind. But getting pre approved is definitely what you want to do. Watch out for payment deferments. A lot of manufacturers sometimes will offer a free uh, period of time where you don't make any payments. But keep in mind the interest rate is accruing during that period of time. Uh, they'll say 6 months no payments, but they never say no interest. The interest is always accruing on that loan, and then you've got depreciation to take into consideration also. So the vehicle's depreciating while you're not paying on it, and then it just makes you pay it for a longer period of time, pay more interest. So keep that in mind on the payment deferrals that some of the manufacturers offer. Next slide, Carrie. Monthly payment gains. Dealers like to focus on payment, uh, not really the total cost of the vehicle. Uh, Payment is what most dealerships and salespeople focus on when you're looking at a vehicle. Uh, so you need to focus on and make sure you know the actual total cost of the vehicle and what you're actually buying, uh, not just what the monthly payment is. Uh, because the terms can be extended to meet whatever monthly payment you want. Right now we go up to 84 months. Some dealerships out there on certain thresholds of loans, they'll go up to 96. So a lot of those, uh, do you really want to pay on a car for 96 months? Uh, Most people don't want to go over 72 at the max. We do have some 84 a month, but price of vehicles is high. You get into some of the trucks and some of the specialty vehicles out there, uh, luxury vehicles. They warrant some of those terms to get the payment that's affordable for a lot of people. Next slide, Carrie. So, yo-yo financing. Uh, this is a tactic that a lot of dealerships use. Uh, the financing part uh, of the yo-yo financing, the way it breaks down is what they want you to do is really take ownership of the vehicle. Uh, you know, they say, "Well, go for a test drive, show it to everybody." Some dealerships, I know when I was doing F&I, some dealerships would allow the buyer to take the car for a couple days. Take it, show it to all your friends and relatives, let your neighbors see it, uh, and during that time, you're actually taking ownership of the vehicle. And that's what they want you to do. So the yo-yo financing comes into play when you take the car off the lot. You haven't really reached any final terms, or you think you're getting a rate while you're actually test driving the vehicle, and then you come back to the dealership and they say, "Well, the rate that we quoted you, we couldn't get. So then now your terms are different. Your rate's typically higher. Uh, the term may be different, more extended term. Uh, so keep that in mind. I would never recommend that you take a vehicle off the lot until you're actually ready to make a buy decision. That way, you know what the terms are. You've got it all spelled out, and you're comfortable with it. So if you're not comfortable with the situation, uh, keep in mind you can always walk away. If you feel like you're being high pressured and it's a situation that you don't want to be in, uh, there's a lot of dealerships out there. So keep that in mind. Okay, next slide. So reading between the lines. So breaking down the loan contract. Carrie, do you have that contract available?
Yep, let me switch screens. All right, can you see it?
Yeah, you can blow it up a little bit. There you go. So this is a law contract. It's available in a lot of different states. Has a lot of uh, information on it. We're going to look at the first two pages because that's where really all the numbers are. So looking at the total itemization of the amount financed. So this particular vehicle has a cash price including sales tax.
Sorry, I'm trying to get,
That's okay. That's okay.
I blew it up too much. And now I can't. I'm sorry, everyone. Okay, so this is the
Yeah,
first
just
page.
give,
You want me to stay here?
okay.
Okay.
Yeah,
I won't
you
touch
can
it.
blow it up. You can blow it
Okay.
up just a little bit. Okay, that's good. So scroll up a little bit. Okay. All right. So looking at the Federal Truth in Lending disclosures on here, the annual percentage rate is 6.49. Finance charge, everyone can see amount financed, total payments, total sale price, total cost of your purchase on credit, including your down payment. So keep in mind your down payment's factored in that number. Can you scroll down on that? Okay. So this contract is for 72 months. The payment amount, $770.72, has the date the payments begin. And then it just closes late charges. If payments not received within 10 days of the due date, they charge 5% on the payment amount. So you want to keep that in mind. Don't be late on the payments. Typically, once you get it set up with the dealership and you take ownership of the car and you finalize everything, I would set the payments up on auto pay, either through us or through whatever institution you're using to make those payments. Okay, scroll down. And up just a tad. Okay, so this particular vehicle is a Subaru Outback. Keep in mind right here on the down payment amount, it has the gross trade-in allowance is $29,600 less the payoff. Now, this is where a lot of people get in trouble. They trade vehicles either frequently, more frequently than they need to because they like the new bells and whistles on the new products that are out. But this particular vehicle has negative equity of $2,405. He's making a $10,000 down payment, but the actual down payment that's going towards the purchase price is $7,594 because they're paying off the negative equity in the trade-in. So I've seen people get in trouble trading vehicles on a frequent basis 2 or 3 times, in a couple of years, and having as much as $10,000 plus in negative equity. And some of these institutions that dealerships have relationships with will do loan to values up to 130, 150%. So do you really want to carry that negative equity with you for that length of the loan? And then if you decide to trade 5 years and you have a 6-year, 7-year contract, are you going to carry that negative equity with you to your next vehicle? And that's what a lot of people do. So you got to be mindful of how much negative equity you have. If you have negative equity, I would definitely take the initiative like this person did to make sure it's paid off in the down payment. A lot of people come in with negative equity. They say, well, there's a percentage of people out there that don't put anything down on a new car purchase or used car purchase. They come in, they factor in title tags, all those different things and the amenities. They put it all into the sales price and finance everything. And that's why we have a cap on what we allow you to finance with the credit union at 110% loan to value. Now, if you elect to get an extended warranty, gap coverage, and keep in mind our gap coverage is pennies compared to what some of these dealers are charging for gap. And we also offer some different things with the gap coverage. Our gap coverage, I'll throw in right here. You can have the fee, of course, included in your payment, or you can pay with it by cash, check or credit card. It protects up to 500% of your vehicle insurance deductible. So if your collision deductible is $500 and you end up having gap coverage and you have to pay that deductible to your insurance company, the gap that we offer protects it up to $500. So it will actually pay your deductible. Protection includes up to 5 skip payments during the term of the financial agreement. Skip payments are missed payments that are authorized by the credit union or caused by delinquency. So you can have up to 5 skip payments with our gap protection. It's available, obviously, to purchase anytime during the life of the loan. Keep in mind, gap protects the loan. The warranty protects the vehicle, the extended warranty. The Gap Plus feature that we offer waives $1,000 from the loan or lease when the replacement vehicle is financed by us within 120 days after the member's primary insurance company issues a settlement check on the Gap coverage. So if you have an accident and you decide you have our Gap coverage and you decide you're going to purchase another vehicle within that time frame, we give you $1,000. Our Gap offers you waives $1,000 from the loan on your next purchase of your new vehicle. So that's a benefit that a lot of dealerships do not offer. And keep in mind, a lot of people will say, well, my insurance company carries Gap and I can get it through them a lot cheaper. But Gap coverage through an insurance company, whether it's Progressive, Allstate, State Farm, they're all different, but they don't cover or offer those type of benefits. And typically the coverage is less. So keep that in mind. So, the whole idea of this presentation tonight is not to bash dealerships or financial institutions. It's just to make everyone aware what your options are. We all have options and we all like choices. So we don't want you to feel like you ever go shopping for a vehicle when you're backed in the corner for any amenity. It's based on what your needs and what your situation is. And that's, we just want you to be comfortable when you make a vehicle purchase. And knowing what your options are, where we can break it down for you, obviously, is going to help you make that decision. Can you scroll down on that, Carrie, a little bit? So all these optional line fees that you see, optional Gap contract, there's the Gap. This person's not buying Gap. If you're buying a vehicle and you're financing more than 70% of the vehicle cost, I would get Gap, especially on a loan like that. I would recommend Gap on everything because depreciation on vehicles is pretty substantial. And you don't want to be caught in a situation where you have an accident and you have a deficiency balance that's $3,000, $4,000, $5,000, where the insurance company doesn't pay the actual loan amount. They pay the value of the vehicle. So that creates a deficiency balance, and they're going to come to you and say, okay, we're going to give you X number of dollars, but you still have $3,000 on your loan. So you're going to have to pay it out of pocket or go into a situation where you have to get a personal loan to pay the difference. And I know people don't want to do that. So just keep all that in mind when you go shopping for a vehicle. Some of the fees on here, like the registration fees, those are set, based on what the state requirements are, what they charge to register a vehicle. Documentation fee, I know everybody's familiar with processing fees. Processing fees are set by the dealership. They're not state fees. I worked for a dealership, and the dealer principal considered processing fees his boat money. So, that is typically they're not negotiable, and dealerships set them, and they're administrative fees basically, but they do not want to give them up. And since I've been out of the car business and I've been at the credit union, processing fee at the dealership I worked for was $2.99. Now they're upwards of $7.99, $8.99. I see them high as $9.99 at dealerships. And typically, processing fees, there is some back office administrative work that has to be done when a vehicle is sold from a dealership, and then they take the title work down to the DMV. But I don't think it's worth $999. So be aware of that. If you can negotiate it, say something about it. Don't just take it for granted that it's on the contract and you have to pay it. So you may get lucky and be able to negotiate it down. All right, Kerry, can you scroll down just a little bit? Okay. So electronic filing fee, that's for title, flat fees. Those are all fees that are probably legitimate on this contract with the purchase price of the vehicle. Total other charges and amounts paid to others on your behalf, that's including that $5.99 documentation fee. And I'm pretty sure that is the same thing as a processing fee. They just call it something different. There are some states that cap processing fee amounts. I don't know them all right off the top of my head, but they do cap how much they can charge for a processing fee. But most of them do not. Okay. And let's see, scroll on down to the bottom right there. So keep in mind, all these contracts, you can sign a contract 5 years, 6 years, whatever's, based on your situation, whatever best suits your budget. But keep in mind, these auto loans and everything that we offer through the credit union doesn't have a prepayment penalty, so you can pay it off anytime you want to. If you start out on a 5 or 6 year loan term, and 2 years in you win the lottery and you want to pay it off, certainly you can do that without any prepayment penalty. So just keep that in mind. You can change it. And, if you're buying a vehicle from another source, because a lot of dealerships do not like to let you walk off the lot without financing, or they'll pressure you to finance with them to get the vehicle. So keep in mind, sometimes if it's advantageous for you to get the vehicle, because we have had members where vehicles have been sold out from under them after they commit to the purchase. They go back to pick it up next day and the vehicle's gone. And it's happened several times. So there is some issues with that at some dealerships. They just want the money. Whoever comes up with the funds first and has the check first, those are the ones that typically drive off with the vehicle. And it's unfortunate because there should be a little more loyalty between the consumer and the dealership, in my opinion. If you make a commitment to buy a vehicle and you say, United States Senate Federal Credit Union will overnight you a check, you'll have it tomorrow. When you go back tomorrow to get the vehicle, you expect it to be there. So just keep all that in mind. All right. All right, Carrie. And then the bottom of this law contract, there's 3 pages of all these legal breakdowns. What it tells you is what on. So we're not going to go over it tonight for time's sake. But if you're looking at any type of contract, you just want to make sure that you understand what the contract says and states. And these law contracts are very lengthy. So make sure you understand what you're signing. Okay. All right, next slide, Carrie. Go ahead on to the next one.
Oh,
Yeah, go to the next one.
this one?
Yep.
Okay.
So obviously the power of the pre-approval, that, I'll tell you what, Carrie, back up 2 slides. I think I missed a couple. Back up 1 more. Okay. All right, go ahead. Go ahead forward again like you were. That's fine. Okay, so the power of pre-approval. So I mentioned this earlier. Uh, Understand exactly what you can afford before you shop. If your threshold for buying a vehicle is $40,000, don't waver uh, very much because you know what your budget will handle. Uh, Dealerships will show you vehicles with more uh, amenities and say, well, I want you to be, but I can stretch your payment out, for 84 months instead of 60 months. So you can drive this one. So go in with a mindset and stick to what you set your standard at for what you want as far as affordability. And having a pre-approval, it gives you negotiating power, strengthens your position at the dealership because you know exactly what you can afford and what you want your payment to be. And as far as the interest rates, you know what area you want to be in for that. That's going to give you that payment that you want. All right, next slide. So the car buying process is actually 3 conversations. You want to negotiate the price of the vehicle, negotiate the trade-in value, and negotiate the financing, and do it all separately. A lot of dealers try to bundle this all together in one big swoop. They give you the price with your trade-in. I would recommend not giving the information on the trade-in until you negotiate the selling price of the vehicle that you want to buy. Just because you can tell just by looking at a salesperson when you give them that information where they want to take you in the selling process and in the buying process. Trade-in values. I'll give you a personal story. I bought a new vehicle in April. Went to a dealership. My wife and we found the vehicle that we wanted. And our trade-in, they took it. Of course, an appraiser takes it, appraises the vehicle, comes back, and they do their song and dance with the sales manager and determine what price they want to put on the vehicle. So in the meantime, having been in the car business before, and I recommend to everybody to do this, that week, earlier in the week, because this was on a Saturday, earlier that week, I went to CarMax and put all my vehicle information into CarMax's site to sell my vehicle to CarMax. And they sent me a number, and I took it with me to the dealership. Had it on my cell phone, because everything now is digital. So I had access to that. He gave me the trade-in value, and CarMax offered me $6,000 more than the trade-in value I was going to get at the dealership. And I showed it to him, and he said, well, I'll give you a car to drive so you can go up there and get your check. And he did, and I did. And I went up there and I sold it to him that afternoon and made the purchase. But CarMax is a good outlet if you want to sell vehicles. I know people that buy vehicles and they'll take them to CarMax and sell them just to turn on money. Now, the explanation I got at CarMax, how they can do this and offer more money because they're a national company and they transport or they can ship vehicles anywhere in the United States. So if you ever go on a CarMax site and you're looking for a specific vehicle and you find it, it'll tell you where it's located, whether it's in you know, DC area, Maryland, Virginia, whatever state it's in. And it'll actually give you the shipping cost of how much it'll cost to get it to your location. So that's why they offer more money, because take, for instance, four-wheel drive vehicles are more valuable to people in colder climates, basically, because of snow. There's not a whole lot of four-wheel drives other than, the Jeeps and that type of thing in Florida. I mean, I'm not saying people don't have four-wheel drive vehicles, but they're not as prominent in those warmer climates than they are in places where it's a whole lot colder, because that's where they want them. All-wheel drives are pretty prominent everywhere. I mean, everywhere you go, you see Subarus, and they're all-wheel drive. But the four-wheel drive, but CarMax, I would definitely recommend if you're getting ready to trade a vehicle and you want to get the most value. I would definitely recommend that you go to their site and put your information in. And just, you're not obligated to anything until you make that decision. But at least it gives you some comparison, knowing what your vehicle's worth. And of course, price on the vehicle that you're going to purchase. You want to negotiate that and do your homework. The car business has become an internet business. I have a brother-in-law that was in the car business for 34 years, and it was a loyalty business at that time, and it was a referral business. People referred their friends and relatives to him, and he thrived in it for 34 years. But nowadays, I don't think there's a whole lot of loyalty. I think it's whoever's got the best price, whoever's got the vehicle I want, and whoever treats me the fairest at the dealership. Uh, I think a lot of those things come into play, and it's definitely not like it was 20, 30 years ago, where you had that friendly relationship. He was in the car business for 34 years and worked at two dealerships. So you don't see that very often any longer. Okay, next slide, Carrie. So obviously, what we can negotiate, obviously interest rate, add-ons, uh, add-ons as far as um, different types of amenities that you want on the vehicle. If you want something special, you're looking at a vehicle and you want roof racks, for instance, to carry luggage, that type of thing. Those type of add-ons you can negotiate in, and obviously add-ons as far as different types of insurances, gap protection, warranty. Uh, just make sure what you're negotiating and what it includes. You don't want to get to the finance office and have a bunch of surprises on add-ons, because the out the door price typically would be everything that's included in the purchase that you're going to make. That's going to include the warranty, the gap, any type of additional accessories, anything like that. You want to factor that in when you're looking at the total price. And I would definitely, just to throw this in, I would recommend everybody freeze your credit file. Just because when you're at a car dealership and you decide to make a purchase, you don't want your credit being pulled at 5 or 6 different lending institutions. You freeze your credit file; it doesn't cost you anything. And anytime you go shopping for a major purchase, you have to unfreeze it. You just go online and you unfreeze it, and as soon as they pull your credit, go back in and freeze it over again. but I would definitely recommend that you freeze your credit file, especially with the fraud that's out there this day and time. And we won't get into that, but believe me, it's out there. And people are looking for ways to get your money illegally. So just keep that in mind. But some of the add-ons also would include things like Debt Shield. We offer Debt Shield protection. We offer it in 4 different areas. So you can have on your contract, you can have life and disability, life, disability, and unemployment. You can have disability and unemployment, life, disability, and you can have life. So we're going to give you those choices. If you don't want it, you don't need it, that's fine. But, like I said before, we're going to make sure you know what your options are. And that's one of them. And protecting a loan, the size of some of these vehicles we see, price-wise, it's important to people. And some of the, some jobs nowadays are vulnerable to layoffs, and being able to protect that and protect your loan with those type of debt protections is crucial to a lot of people. So just keep it in mind. We offer it. We're going to offer it to you. If you choose not to have it and not accept it, we're not going to push it on you. We're just going to let you know what your options are. Make sure that we tell you about it. Because, God forbid, you buy a vehicle, finance it with us, and 6 months into it, you have a situation where this could have helped you, and you say, well, nobody offered it to me. So that's not going to be the case with us. We're definitely going to offer it to you. And if you choose not to accept it, you just sign off on it that you don't want it. So keep that in mind as well. Okay, next slide. So questions to ask the finance manager. And you can probably think of some more of your own. But what's the base APR, the annual percentage rate? What is my rate? Is the best way to ask that. Are these add-ons or fees optional? And this is where you can go over everything with a fine-tooth comb while you're sitting in the finance office. Can I take the contract home to review? I'm going to tell you right now, that's probably an absolute no, because the way a dealership would see that is I give you a contract on a vehicle. It's going to have the VIN number and everything on it. And you're looking at a new Toyota. So the first thing you're going to do, and what everyone would do, is go to another Toyota dealership and say, hey, Billy Joe's Toyota dealership gave me this. What can you do? Can you beat this price? So that's why you're not going to be able to take a contract home. You can get all the information on the vehicle, but as far as the actual contract, taking it out of the dealership and going and waving it around town to other dealerships, that's not going to happen because they know where that's going to end up, and it's going to end up with them losing a sale because somebody's going to beat that price. And like I said earlier, that's the name of the game in today's car buying world. It's who's got the best price, who's going to help me the most. So if you're out there with a contract, somebody's going to beat that price. With a car, basically the same options of the one you're looking at that dealership. So the out the door cost, again, is what you want. You want to know what your total price is walking out the door. But as far as taking a contract out, that's probably not going to happen. And I think everybody can probably agree with that. So next slide, Carrie. So research before you shop. Use Kelley Blue Book, Edmunds, Carfax. Carfax is a great tool. Some places you have to pay for it. But keep in mind now, we don't do private private sales from private individuals. We used to, but we don't do them any longer. So if you're purchasing a vehicle, it's got to be through a dealership. Now, that doesn't mean you can't buy from a private individual. You just have to do it a different way. Maybe with a personal loan, get the car, get it titled, get it put in your name, and then refinance it with us. So we can certainly do it that way. Check the trade-in and the retail values on your vehicle before you get to the dealership. Know what your car that you're driving that you're going to trade in is worth before you walk on that lot. Because a lot of people don't know. And then prepare for negotiation with the data that you have. So that's a big part of it, is knowing what your vehicle's worth so you know if you're being taken advantage of. And as far as the Kelly Blue Book, that's why we use that, and we actually pull the value of a vehicle that you want to purchase to make sure you're not being taken advantage of. And that's why we cap our loans at 110% loan to value. Now, if you're adding, GAP and some other things, mechanical repair coverage, we'll go up to 125% loan to value. So you can include those in your payment. But we don't go 140, 150% on the loan. So keep that in mind. Okay, next slide, Karen. Know when to walk away. And I think I already mentioned this. If you feel in pressure, high pressure tactics, today only deals, you'll hear things like, well, that price is only good today, or I've got, another couple looking at the same vehicle. They'll tell you almost anything to get you to back you in a corner, really, to help you drive out of that dealership with that vehicle today. But if you're feeling any of that, like I said, there's a lot of dealerships that you can make a purchase from, and you don't need to be treated that way as a consumer. So, know when you're being high pressured, and I'm sure you will know, but know when to walk out. Even though that's the car you want and you're in love with it, believe me, there's another one out there with your name on it. So don't feel pressured to do that. Okay, next slide. So finance with us, we offer low fixed rates for new and used vehicles. As I mentioned, we'll finance up to 84 months, 110% loan to value financing, and convenient pre-approval process. So our pre-approval gives you some ammunition when you walk on the lot. It's kind of like being pre-approved for a mortgage loan. There ain't a realtor out there who wants to talk to anybody that doesn't have a pre-approval for a mortgage. And it's getting the same way in the car world. Walking on the lot with a pre-approval from us, I think it gives you some leverage. So you're already pre-approved. They know you have, credit approval, and that you're a buyer. So you're not just on the lot kicking tires. They know you're serious about making a vehicle purchase. So the pre-approval gives you that leverage. So, we're happy to provide that to you. Okay, next slide, Karen. So GAP Plus, I mentioned that. Mechanical repair coverage and debt shield, we offer all those. Keep all those in mind. And, there was a day and time, I'll tell you, I didn't believe in car warranties. I was like, I'll take the manufacturer warranty, and if I'm having a problem after that runs out, I'll consider purchasing something. But I'll tell you, I took a vehicle last summer to a dealership, that had with all the technology on these vehicles nowadays, I mean, it is crazy what these dealerships charge per hour for labor. I'm not even talking about parts. I took a vehicle to a dealership. My front end collision sensor went out. One sensor in the front grille. And I had an extended warranty on it that I bought through this credit union. And the repair, they had it for 3 days because they had to order a part. And they had to disassemble the front grille and the front bumper to put the sensor in. So that's where the labor cost comes in. I think the part was $400 and some change. And the total bill, they showed it to me, even though I didn't have to pay it because I didn't have a deductible on that policy. And it was $1,900, over $1,900 for one sensor. So, uh, yeah, I know there's people out there like I used to think, and I don't need a mechanical repair contract or coverage because I'm covered through the dealer. That's absolutely not true. Uh, if you ever experience now, you got a 336 typically on new car warranty and 560 on the powertrain. But when those are gone, if you're planning on keeping that vehicle for any length of time, and then people refer to that 336, as bumper to bumper coverage. It's really not. You need to find out what that 336 actually covers because there are things in that 336 warranty that aren't covered, that a mechanical repair coverage contract that we offer would cover. So you want to make sure that you know what's involved in the warranty, what's covered, and what's not. And I'm telling you, the labor rates are absolutely astronomical. $140, $180 an hour is average at dealerships. So pretty pricey. And then, of course, Debt Shield. I talked about that. So the life and disability, those options are good for you. If you want to protect the loan uh, during the life of the loan from anything that would happen, adversely, uh, an unforeseen accident, job layoff, anything like that. Okay, next slide. So right now we're offering a promotion. So if you purchase uh, a mechanical repair coverage contract with us, you're entered to win in a drawing up to $2,500. So keep that in mind. We'll automatically enter you when you make that purchase, and that is always fun to see who wins it. We've done different types of drawings for things like that before. It's always fun to see who comes out on top. So uh, just we'll mention it to you that you'll be automatically entered when you make that purchase. Okay, Carrie, and next slide. TrueCar. TrueCar is a great buying service. The good thing about TrueCar is you can put in the type of vehicle you want, the shopping radius, if you want to shop up for a vehicle within 50 or 100 miles, what type of vehicle you want, what amenities you want on it, what the options you want. It saves you a lot of time. And the uh, TrueCar is actually a dealer service where dealers are signed up with TrueCar. So if you get a TrueCar quote, the dealership has to honor it. So it's kind of like CarMax in a sense that it's non-negotiable because the price is set through TrueCar, but typically it's lower than what you'd get at a dealer through negotiation. Uh, Now sometimes you can change that if you're at a different dealership, but if they're TrueCar certified, uh, that's a buying service that is available to anybody. And you can go online just to truecar.com and you can put a vehicle in and search it any way you want to. Like I said, with the options, uh, mileage, radius, where you want to shop, and find the vehicle that you want. And you can do that on new and used vehicles. Uh, so it's really a great service. Okay. All right, Kerry, I think that's it for me.
All right. Thank you so much, Ken. That was a great presentation. And again, it just goes to show that that you really know your craft when it comes to the auto industry and the lending, to be more specific. And for those that don't know, and I failed to mention this at the beginning, but Kenneth is actually our senior consumer lending officer here at the credit union. And if you ever submit a car loan, there's a pretty good odds that he might review your loan. So I'm just throwing that out there. But again, Ken, thank you. One of my takeaways, and something that you mentioned, Ken, is to for anyone that is going into a dealership, and you are going all the excitement, right? Hit the brakes. Don't go too quick. Don't go too fast. But most important, never shop with your emotions. Think you gotta let the emotions on the side. Otherwise, the dealership can easily take advantage and find that as a weak spot. And you might end up driving there with a deal that is not on your side, if that makes any sense. But again, Kenneth,
Yeah, and that's where the deal remorse or the buyer's remorse comes in 2 or 3 days later. But it's definitely an emotional buying decision.
absolutely. All right. So with that being said, I know Eli and Andrea, I believe we have some questions, some comments in there that you all want to share. So I'll hand it over to y'all.
Yes, so thank you so much, Kenneth, for presenting. I absolutely loved it and learned so much, and I'm sure everybody else who is joining us tonight has also learned so much from you. Thank you. And thank you, Carrie, again for making the presentation. So the first comment that we have is I have I have bought cars with USFCU, or USFCU has better rates than dealers, so I use USFCU to finance the purchase. And as Ken said, thank you so much for telling us your testimony. We love to hear things like this every day. So thank you so much. And then we do have an easy question. Well, yes, well, kind of easy. It's specifically for Carrie. But do we record these webinars?
Yes.
Okay.
And then we try to get them posted out on our YouTube channel within the next couple days.
Thank you so much, Carrie. And then also, okay, the first question is, what is the risk-based financing notice related to car financing, and do you have information on that?
Risk-based. I'm not sure what they're asking.
I can help here if you want me to.
Sure, go ahead.
Okay. So risk-based pricing is essentially a practice that lenders use to determine the interest rate and other terms of credit products based on an individual's credit worthiness. So it allows lenders to offer tailored terms to borrowers. So the higher your FICO score, your credit score, and we use Experian, the better rate you're going to get. You can find information about this on the internet. We don't disclose notice. We don't have to disclose a notice until we've actually pulled your credit and determined your rate. I hope that helps.
Yeah,
Yeah, it
and
does.
to add to that also, Cam and Ken, please feel free to jump in as well. But it is my understanding that not every car gets the same rate. So the rates are oftentimes they're based on what Ken mentioned, but it also the type of vehicle also has plays an influence into the type of rate. Is that correct, Kenneth?
Oh yeah, yeah, yeah. Like BMWs, Mercedes Benz. Uh, you know, typically it's a credit based decision, uh, but the vehicles, uh, sometimes manufacturers offer certain incentives that we don't offer. If you can take advantage of that, like I mentioned, uh, and puts you in a better situation, we recommend that you do it. It's all about, like I said, it's about knowing what your options are, uh, and you being happy with us for giving you the right information, uh, not just to do a loan or sell a car, but we want you to be happy because, if we treat you that way when you're making a vehicle purchase, uh, would we treat you that way when you decide to buy a new house? And our mortgage department has the same concept. It's about helping you make financial decisions all across the board, not just about buying vehicles. So
Absolutely.
I think the credit union is pretty much a testament. And we have a lot of members that do all their banking with us. And the thing that's amazed me over the 10 years I've been here are all the members we have that have retired, even out of DC, that are in all 50 states that continue to do business with us. Because when they call the credit union, they know they're going to get somebody they can talk to, and they know we're going to help them. They're not just a number to us. So I think that just holds true across the board, and that's why we have such a strong membership.
Absolutely, Ken. And I'm gonna steal Kim's favorite word, which is people helping people, right, Kim?
Yeah.
Yeah,
Right.
that's what we're all about. All right, Eli, what any other questions that you see there, sir?
Yeah, so we have a couple questions here. I'm going to try, there are a couple separate questions that came through that I'm going to just try and break up a little bit here. So the first one is, in the dealerships, if you ask the dealership, are they required to disclose if the vehicle has any sort of flood damage in the Carfax report if it's been involved in an accident?
Absolutely. Required by, and there's some things you can check. When they had these floods in North Carolina last year, and even some down in Florida over the years, uh, you know, some of these manufacturers will list things online for you to check, like reach up underneath the dash and feel if you feel anything grainy, like sand or dirt underneath the dashboard. Because typically, if a vehicle's been re-detailed after a flood, those are just certain areas of the vehicle that they'll miss. And if you reach up underneath the dash and you feel any type of sand or anything like that, anything that makes you say, I don't know about this car, uh, look at something else. But yeah, they are required to disclose it. Carfax will definitely pick it up. Uh, so that's why I recommend, getting a Carfax on any vehicle you're looking at.
So be
And
really
typically,
careful. Oh, sorry. Go ahead, Ken.
I was going to say, and typically dealerships will provide a Carfax report.
I was just going to say, be careful if it is a individual selling. You're purchasing from,
That's
not from a dealer,
right.
but an individual, especially
Absolutely.
with flood damage.
Yes.
Thank you. And in addition to that question, Ken, you mentioned to not drive vehicles off the lot unless you're ready to purchase. Does that include don't test drive the vehicle as well?
Oh no, no, you want to test drive it. You just don't want to take it. I've had dealerships, uh, give people vehicles and you keep it for a day or two. So, like I said, as you drive that vehicle, if that's really the one you want, uh, you're taking ownership as you're test driving it. But if you don't know the terms of the purchase, and you don't have any clear contractual information, when you get back, you could be really frustrated based on what the selling price is, what they're going to allow you on your trade, and what the amenities are and what your payment's going to be. So knowing all that up front is going to make you know the whole experience a whole lot easier. Now, test driving a vehicle, when you say test drive, I would get in the car, test drive it, on the interstate, make sure it does what you want it to do, test the options, make sure it's got all the options you want. Uh, and then when you decide that that's the one you want to purchase, that's when you start the negotiating process to make sure you're going to get the best deal in the best situation you can get. But don't just blindly, uh, you know, go drive a car that you're not sure you can afford because you don't have any real information on it. Make sure you get all the information up front.
Awesome. Thank you, Ken. Andrea?
Yeah. So we do have another question or another few questions. So the first one is for Carrie. The presentation is recorded, but can we request the slides via email? And are they available are they available on the website?
Oh yeah, I'll put them on there and I'll share them out tomorrow morning. The video, I won't include the video because it won't be ready yet, but sure, I would love to send it. Thank you for asking.
And then the next question is, freeze credit files. Do you have to go to all three credit reporting companies, or is there a one-stop shop to freeze all three at once and to Google on/off?
Uh, I would go and freeze all of them individually. Uh, you can freeze just one. It's Experian, TransUnion, and Equifax are the three that you want to freeze. Uh, and they all operate kind of the same, but differently. Now, if you have a fraud alert on your credit file, if you contact one credit bureau, uh, all three automatically get frozen on a fraud alert. But that's not the same as a freeze. It's separate. So in today's world, in risk management, we see this. Uh, if you get a fraud alert on your credit file, or you'll get something where something's been breached uh, by someone, that typically will that that institution will contact you and let you know that they're going to cover your credit file for 12 months, uh, really at no charge. You just have to sign up for it online if your information's been breached. So, but yeah, typically if it's a fraud alert, all three credit files will be uh, locked at the same time. But the credit freeze, I recommend that to everyone, because it doesn't cost you anything. And that way you know that your credit file is safe until you get ready to make a purchase.
Thank you. And returning to car purchases, we have someone asking your opinion, Ken, on purchasing from auctions. If you know someone or a friend where that's their job, what's your opinion on the personal connections with?
Yeah, as long again, it's about knowing the vehicle, knowing where it came from. If you can get a history, you can still pull a Carfax history on an auction vehicle because it's all done by VIN number. So, uh, yeah, I mean, if you trust the person and you can get information that's relevant on the history and the current condition of the vehicle, I'd say absolutely. Uh, so it's all about you feeling good about the decision that you're going to make. Uh, and if you have somebody that works there and is a friend of yours, typically they're going to know the vehicle. The ones that rush down the auction line that nobody's bidding on is probably the one you want to stay away from. But if you know somebody and you can get the history on it, and just because it's at an auction, it doesn't mean a whole lot. It doesn't mean it's a bad vehicle, because typically, dealerships, and I don't know if you're familiar with what the principal reflection rule. when I was in the car business, that always amazed me. We'd have different vehicles on the lot, and every couple of weeks we'd move them around. And we had inventory control where we knew when that vehicle was taken into inventory. And we had cars on the lot that had been there 6 months. And we'd move them on the lot, and somebody would drive by and say, "When'd you get that car? I've never seen that one before. It's been on the lot for 6 months. We just put it in a different place." You shine it up a little bit and you just move it around. And it's the principal reflection. So it's kind of like when you buy a new vehicle, you don't realize how many of them are on the road till you own one of them. That's the principal reflection. You got here and you buy a Corvette, you're going to see every Corvette on the road because everybody's going to have one. And it's pretty amazing the way that works. But whatever you buy, there's plenty of them out there. But yeah.
Thank you. Anything else, Eli or Andrea?
Yes, I believe so. So first we do have a statement for like buying cars, or Mr. Ken. On my last truck that I bought, I got 2 oil changes a year for 5 years. It worked out to $45 an oil change. Regular price was 100 per oil change. It saved me money in the long run. It cost me 450. And I took all the add-ons home and looked them over before I went back the next day to buy the truck. That way I knew what add-ons I wanted from the dealer and the ones I found cheaper or better at the credit union. So that's another note that you want to, save in your pocket for when you're gonna go buy a car.
Yeah, and keep in mind, some dealerships will offer maintenance contracts that cover certain things. I mean, uh, door dings, scratches, tire issues. But I'll tell you on the tires, because here's another experience I've had in my 52 years of retail. I was a manager at a Firestone for 11 years. So I know the tire business, and it ain't changed much. Uh, so if you buy a new vehicle, and this would only apply to new, and the tires have under 100 miles on them, you can go to a dealer that sells that tire, and you can buy a warranty on that tire through that dealership. So I just did it with Discount Tire on a new vehicle I bought. So I'm covered now for road hazard, flat repairs, free rotations, uh, and as long as I have ownership of that vehicle, I don't have to worry about any of that. So a lot of people don't know you can do that. And typically it's less expensive to do it through the tire dealer than it is through the dealership. Because tire dealers, that's all they do is tires. Um, so yeah, keep that in mind. I forgot to mention that, but tires are something you definitely want to cover. They're not getting any cheaper, especially on trucks. I mean, some of these truck tires I've seen, 22, 24-inch wheels, uh, they're pretty pricey. A set of tires cost you well over $2,000.
Thank you so much. And then we do have another question. I believe this is my last question. It says, what tax incentives are available for buying EVs?
I think now it's what is it? Is it $7,000? I'm not absolutely sure. I think some electric vehicles, and I would go straight to the dealer uh, that you're buying the electric vehicle from, because they're going to have the current tax incentive information on those vehicles. I don't have it right up front, so I don't want to just say. But I recently heard somebody say it was $7,000.
It's 7,500, and keep in mind it ends September 30th of this year.
Okay, there
Yeah.
you go.
So you were very close.
Yeah.
Off by 500, but yeah. And Eli, I
Yeah.
think I just got one last question coming in, and this is going to be the last question. And I know we got a little bit over time, but again, this is just has been a great presentation. And again, thank you, Kenneth, doing
Sure.
it, and most important for sticking a little overtime with us here. But Eli, do you mind reading the last question?
Yes. So this question begins with a statement that I've used the credit union to purchase their last 4 vehicles. So thank you for that. And they just want a reminder that this may have been mentioned, but does the credit union still have the pre-selected dealerships for specific make and models, where I believe the pre-negotiated deal was pay no more than $100 over something, but they forgot what it was. It's like a refresher.
Not that I'm aware of. If you're looking for something that's a preset limit, I would definitely look at TrueCar for that. If you're looking at a specific vehicle, because once you find the vehicle and you lock that TrueCar price in, the dealer is obligated to honor it. And it's ever changing. The car business is so much different than it was when I was in it. But I still have a lot of friends in it, and I still keep up with it. Not on a daily basis, but being in the lending department here, it's advantageous to know what's going on in the market. So that's what I would recommend, the TrueCar side of it.
So we did have one more question come in. What are the
Mhm.
pros/cons of used versus new?
Well, I think it depends on what type of vehicle you're looking for. And obviously, price points are different. Used, somebody else has eaten, so to speak, that depreciation. So, the vehicle is going to be less expensive, but typically is going to have some miles on it. Now, I've seen, cars I did one today. The car was 3 years old, but it only had 7,700 miles on it. So, if you can find something like that that's been garaged, not driven a whole lot, uh, that's a good buy, and suits your needs. I'd buy it. So really, the pros and cons are: does the vehicle meet your needs of what you're looking for, and is the cost difference from new to used really a big issue? If it's several $1,000s, keep in mind we offer the extended warranties, so you can still cover that vehicle uh, for a specific period of time, and you can have full coverage on it, just like you would if it was brand new, and sometimes even better, uh, because our extended warranty offers options that you don't get on a new car warranty. And that's why we always offer extended warranties on new car purchases. People say, well, why would I need an extended warranty on a new car? Well, if you compare the options of what's actually covered and what's not, uh, like our True Stage warranty, our best platinum True Stage warranty covers dents in your car up to 4 inches in diameter. So if you're like me, I'm pretty particular about my vehicles. I always park on the back nine, when I go to the grocery store or something, because people do not take into consideration your vehicle and slamming a grocery cart into it. And if you go to a body shop to get a dent fixed that's a 4 inch diameter, they're going to tell you, well, we got to fix it. We got to paint the door to get it to match, and it's going to cost you about $450. So is it really worth it to have that extended warranty that actually covers it? Yeah, it is. If you're as particular as I am. My wife actually made me trade in a car because it had a dent in it. So, she got sick of hearing it, and I told her I wasn't paying to get it fixed. So she said, well, let's get rid of it. I said, okay, well, you're the boss, so whatever you say, that's fine. So just keep those things in mind. We do offer great warranties on used vehicles. So if it's something that's advantageous for you and it suits your needs, I definitely buy used. New is, the incentives sometimes are better, but it depends on what you want. And if you can find something that suits your needs and has the right mileage and the right options and everything that you want to cover. Just add an extended warranty to it, and you're covered. That's my opinion. Extended warranties, like I said, I didn't used to believe in them, but with today's vehicles and the technology and everything that's in them, you almost have to have it, unless you got a lot of money stashed away for vehicle repairs, because they're not getting any cheaper.
Yeah. Oh, you hit it right on the nail. And then again, I want to thank also Mr. Ken. I saw he submitted a couple of comments in reference to when you were talking about the whether or not the dealer discloses the information if a car has been has been involved in an accident, or is there any water damage. And then one of the comments that Mr. Ken brought in for us is that is for you to look under the seat under the seats, and also look for the where the tire replacement is. If you see any rust around that area, that could be a sign that the car might be probably was in a flood. So again, some of the things to be to keep an eye out. But again, with that,
especially if it's only 2 years old. You're not talking about a 1960 model. So yeah, a rusted 2-year-old vehicle, I'd have some question marks on that.
absolutely. But again, with that being said, Ken, I want to thank you personally and on behalf of the whole panel here for providing this presentation. This is your first webinar. We hope to welcome you back in the near future. I mean, this has been one of the most engaging presentations we have had in a while. And again, it really it called for having an expert in that issue. So we thank you for your time. And one thing I will say before I let everyone go, highly would like to invite everyone to come and see us next week again. I know we're talking about cars, right? And the webinar for next week, it's all about smart saving strategies. And I know this presentation was about cars, but right before towards the end, Ken mentioned a great point, and that what he said was the price of tires. Boy, you are right when you're talking about tires. It's insane. So, if you want to learn a little bit about how to create a simple, effective saving plans for emergencies, for goals, any expenses that you're anticipating, please join us next Wednesday at 6 p.m. We will love to have you here. And it's going to be another great webinar. But again, with that being said, panel, as always, thank you all for your amazing work. And Kenneth, once again, thank you, sir. And we'll hope to have you back here very soon.
Thank you.